Introduce you to the most important chart any investor should ever look to measure and monitor. This chart compares the performance of my investments against the all-world chart. It shows that this month I made plus 0.53%, whilst the FTSE all-world dropped 2.35%. Measuring this on a monthly basis is absolutely critical, because if you find that your investments are performing less well than the FTSE all-world, then it begs the question, why not invest in the FTSE all-world on its own? Of course, investing is a little bit more nuanced than that, and the risks I take with my investments will be and should be very different than the risks that you will take in your investments. We each have our personal goals and risk appetite. The risks you take with your investment will change over time, and the nearer you come to the point where you need to withdraw on them investments, the less risk you will take. I'm around 5 years away from needing to withdraw my investment as a pension. According to this chart that I work to, my target for each month is 0.5%. This puts me midway between the expected returns of the all-share stock and a government bond. In an average month, the all-share will return about 0.75% and the government bond 0.33%. I'd recommend that you come up with your own table based on your own risk appetite, and that you track each month the performance of your investments against your own target. Of course, each month will vary, and as we've seen, the all-world share this month was negative. What kept my performance higher this month was the government bonds. These always return a steady but quite low rate of return each month. These are my actual holdings, and you can see I have 61.3% in an overnight return, which is effectively the same as a government bond. It is how banks lend money to each other overnight, called the Sonia Fund. Then I have 10% in the FTSE All-World, another 10% in some Euro stocks with high dividend, and then some more government bonds with the global high yield, where I have about 6% in there. I keep about 5% in cash, and the rest I invest in different stock, depending on what takes my fancy each month. So if you take anything from this video, I hope it's that you will track the performance of your own investments against the FTSE All-World or one of the all-world stock indices. And also that you'll choose a risk profile depending on the amount of time you have left with your investments before you need to draw on them. So if you've heard my outro, then thanks for listening, and if you haven't, then here's probably the most important bit of investing advice you'll hear on YouTube. Don't buy or sell shares in a company based on what someone on YouTube tells you. The big Wall Street analysts have large teams of professionals with access to vast amounts of data on every single listed firm. There are no YouTube gurus who know better than them. Use YouTube to find interesting bits of information on companies that you may otherwise miss. And when you find something interesting, do your own digging and see what the analysts in the big firms are saying. Never invest more than you can afford to lose, and don't expect to get rich quick. If you are interested in my background, I come from 16 years in risk management with PwC and Deloitte. I've never been on a trading floor in my life, but if I had, it wouldn't give me the edge on the big firms, because they have big teams and masses of information. So don't look for a guru with an edge. Look for information on companies you're interested in. And if you're looking to invest a large amount of money, don't put it on individual stocks. Choose an index fund. The all-world index is a representation of all the stocks in the world. And if one company goes broke, then the index won't even move. Whereas if you've only invested in that one company, then you may have just lost your pension. Keep it fun, keep it affordable, and subscribe to keep getting my updates. Thanks.